This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial expert, Harold Siegel. We're taping the show March the 2nd, 2012. Our time is 8:46 Mountain, 10:46 Eastern. The radio show runs 6:30 CHED in Edmonton, AM 640 in Toronto. And joining us this week is QR77 in Calgary. I've actually been doing the show with Harold now for 10 years as of the middle of February. Harold has been doing the show for over 10 years. We used to be in Calgary, and now we are back. So we're excited to be back in Calgary. If you ever miss a radio show, you can catch us online. Harold's website, HESradio.com, HESradio.com. Harold's other website is rarecoloreddiamonds.com. And he has hsfineauctions.com. We'll talk all about that throughout the entire show. And we have a free weekly newsletter for those in Calgary. If you'd like to get your name on the list for the free weekly newsletter, the companion to our radio show, we'll be happy to send it out to you. There's one company, only one company, that Harold recommends you use when it comes to investing in precious metals. That's Worldwide Precious Metals, a Canadian company in business for over 10 years. Their telephone number, 1-866-623-2002. Their website, wwpmc.com, wwpmc.com. Speak with them about learning and investing in hard assets, gold, silver, platinum, palladium, and get your name on the list for the free weekly newsletter we send out via email. But we're happy to be back in Calgary. Harold, gold and silver have had, since the beginning of the year, a fantastic run. We saw a lot of volatility on Wednesday when Ben Bernanke was speaking. And it's caused a little bit of a problem in the markets. And I'll give you a chance to explain from your point of view what you think has transpired.
Okay. Well, all in all, again, volatility is certainly in the market, and the higher the prices in gold and silver are going to go, and oil, we're going to expect an awful lot of volatility, and this week was no different. In actual fact, gold hit pretty close to a high of 1,800 as we're taping the show on Friday. The market's trading right now at about 1,720. So we did see a big downturn in the market on Wednesday, as you mentioned, Randy. The market came down almost $80 on the day. The silver market was trading as high as $38. It's trading right now back at about the $35 level. We saw actually about a $2 drop in silver on that same Wednesday. Oil market also dropped off. It was trading as high as $110. We're trading right now at 107.50. The U.S. dollar, which was trading at around 78 cents, which is another reason why the metals rallied, is trading today at about 79.31. And there is definitely a direct correlation between the U.S. dollar and the gold and silver markets. The Canadian dollar is actually above par with the Canadian dollar, so the Canadian dollar is actually stronger than the U.S. dollar at this particular point. Now, again, what happened in the market this week was a very short-term situation, and again, realizing that we do not trade the gold and silver markets. What we recommend, due to extremely high inflation coming and other scenarios within the marketplace, you want to buy and hold this market. You don't want to be trading the peaks and valleys. You'll lose your money. The fact is that 90% of the people that trade the futures markets lose almost all of their money, and that is not what we've been advocating for the last 10 years. It's more of a buy and hold situation. The trend has always been your friend, and the trend for gold and silver is to move substantially higher because of extremely high oil prices and inflation happening all around the world. So why the gold market fell $80 in one day was primarily because, number one, Bernanke came out and said that there will not be any further stimulus at this point. Now, that's QE3, quantitative easing 3. We've seen quantitative easing 1 and 2 that actually where the government or the Federal Reserve put about $1 trillion back into the U.S. market on each one of those quantitative easing situations. And they did that to try to restart the economy. It really hasn't worked. So the fact is that they are not going to do a quantitative easing 3 at this point, and the disappointment dropped the gold market down about $80 and dropped the silver market down about $2 on that particular day. Then the very next day, the markets came back very strong. Gold came back about $28, silver came back over $1 on the day. So basically, nothing has been hurt in the markets at all. In actual fact, there's very heavy support in the gold market at 1680. We traded as low as 1703 on on Friday, but right now we're trading right back up at $17.50, and it's only $1 off the high of the day. The silver market, the same thing. There's very heavy support in silver at $34. We did hit a low of $34.51, but we did last week have two closes above the $34 level, which means that the next major level for silver is $38 and then $44. We do feel by the end of this year we will see silver trading somewhere between $50 and $65, and we will see gold trading somewhere between $22 and $2,500. Now, realizing the gold's trading at around $1,700 right now, to get to $2,500 is about a 50% increase in the price of gold, about $800 higher than where it is right now. What would cause the price of gold to move that high? Primarily would be inflation and the extremely high price of oil. Now, oil hit $110 this week, and then it backed off to where it is right now at about 107. You've got to understand the reasons for this. Number one, the reason why oil is going higher is, number one, there is a shortage of oil. Even though the Saudis and the government say that there isn't, there is definitely a shortage in the oil market, and you will see that market trend higher over the next couple of years. And we do believe that the price of oil could easily hit $150 to $200 just under normal circumstance of supply and demand. The other situation that could move the price of oil substantially higher in the short term is obviously the situation that's erupting in Iran. There's no doubt in my mind that Iran hates the West, and they hate Israel, and they are going to go to war. Now, the fact is that Iran is not the type of country that is going to back down. The United States has brought sanctions against Iran, and it's infuriated them. In actual fact, the sanctions that the U.S. has brought against Iran has actually dropped their currency by more than 50% since December. That's one of the reasons why inflation in Iran is skyrocketing to about 20% a month or 240% a year. So basically, one of two situations will happen. Either Iran is going to say, okay, fine, we're going to destroy all of our nuclear plans and we're not going to go forward with our nuclear plans, or Iran is going to attack Israel. They're going to cut off the Strait of Hormuz by mining it with mines and go to war in that sense. And everybody can have their own opinion on that, but I've traded oil for 35 years, and I know what Iran is going to do. They are going to mine the Strait of Hormuz. Then the U.S. is going to bring their warships in from the Persian Gulf and through the Mediterranean, and all hell is going to break loose in the Persian Gulf. And what's going to happen is the price of oil could skyrocket almost overnight to $250. Now, the fact is that the United States says that their warships will stop Iran from mining the strait. And just so you know, the Strait of Hormuz is strategically located, and Iran can block it off. They've done that in the past, and they will do that again in the foreseeable near future. And again, I anticipate that could rally the price of oil to over $200 a barrel. So basically, we do want to recommend, and we have been recommending oil for many, many years now, and we've done extremely well in the oil market. However, to speculate in oil is not the smart thing. To trade the futures markets, you'll end up losing your money because, again, if you can pick the daily, highs and lows of the market, the fact is you do not want to over-leverage anything in the markets, and you don't want to speculate at this particular point. In actual fact, now is the time to be much more conservative. Hold your positions in gold and silver and oil. Now, we do recommend buying physical gold, owning it outright, owning the actual physical metal, because again, if you heavily leverage your position, the fact is that when the market drops, you're going to lose your money. And the fact is that we don't want to see you out of this gold market because the potential for gold is substantially higher. And the reason that you want to own gold and silver is because of upcoming inflation. Back in 1979 and 80, we had extremely high inflation, we had extremely high oil prices and food prices, and the price of gold went from $35 in 1972 all the way up to $850 by 1980. And silver was similar, went from basically $1.25 in 1972 and actually finished 1980 at about $52. Now, also what happened at that point was interest rates went up, and interest rates went all the way up to 22%. So the fact is that inflation is what caused gold and silver and oil to skyrocket back in the late 70s, early 80s, and that's an identical situation to what we have right now. So the fact is that as oil continues to go higher and higher, and inflation moves higher and higher, if you don't own the right type of assets that will offset your inflation, you're going to lose your money. Your standard of living is going to drop, and it basically works like this. the fact is that if your income remains the same, let's say you take a household where the yearly income is $50,000 a year. Out of the $50,000, you've got to pay your income tax. You got to pay your mortgage. You got to pay your car payments. You got to put gas in the tank. You got to heat the home. You got to put food on the table, insurance, clothes, and everything like that. By the end of doing all of that, whatever is left over is your savings. Now, with oil prices trading at around $110 and going higher, and it costs you more to fill your gas tank, it costs you more to heat your home, it costs you more to live. So if your income or your investments are not compensating for the higher cost of living, that's inflation in its most simplistic form. And that's exactly what's happening at this particular point. So if your investments are sitting in paper assets like stocks, bonds, mutual funds, those type of things, those are extremely risky investments. Don't forget what happened in 2008 when Lehman went under and the stock market in the United States and in Canada dropped in half. The Dow dropped from 14,000 all the way down to 6,500, and it was a very similar move with the TSX. You don't want to be caught up in that situation. Now, the reason that the stock markets in the United States are strong at this point, let's not lose sight of what the fact is. It's an election year, and Obama wants to get reelected. So the unemployment is looking better, and miraculously the stock market is looking better, and the economy is looking better. But I can assure you, I'm a Canadian living in the United States, and again, I've traded these markets for 35 years. Things are not getting better. The real estate market's still in the doldrums and not getting any better. In fact, we still anticipate the price of real estate in the United States in certain areas to continue to drop substantially, possibly another 25 or 30%. And realizing that most people have most of their net worth in their home, that's obviously a devastating situation. So again, don't be concerned about the day-to-day movements in the gold and silver. As I mentioned earlier, the trend is your friend, and the trend for gold and silver is substantially higher because of inflation and what's coming up. The other thing is that the U.S. dollar increased in value this week, and there's a direct correlation between gold, silver, and the U.S. dollar, meaning a strong U.S. dollar is not good for gold and silver. And back in the 90s, the U.S. dollar was the strongest currency in the world. Now it's one of the weakest. I just came back recently from a wedding in the Cayman Islands, and the Cayman dollar was 20% higher than the U.S. dollar. That'll put things into proper perspective. The Canadian dollar is stronger than the U.S. dollar at this time, and it will move higher also. There's no doubt in my mind that the U.S. dollar will plummet within the foreseeable near future, and that's why we anticipate that gold will go to 22 to 2,500. And before this whole thing is over, we'll have to continue to reanalyze. But, you know, $5,000, $8,000, $10,000 gold, as ridiculous as those prices sound, are certainly not out of the question. And $200 oil is not out of the question. So if you, again, are sitting in the wrong markets at this point, you've got to look at the overall situation. And the fact is that the stock markets are no longer a safe place to have your money, because we've seen in 1999 the markets plummet. You remember what happened with Nortel when it dropped from $125 all the way down to below $1. And the fact is that this will continue to happen. The economy in the United States is in the doldrums. It is not picking up, but again, being an election year, they have the facade of that actually happening. Then let's not lose sight of the fact of what's happening in Europe. You've got sovereign debt situations. You've got 5 or 6 countries in Europe that are on the verge of bankruptcy. Now, they're trying to keep things going and trying to keep things positive, but the fact is that they can't, because there is no money, and there's not enough money to bail out France and Greece and Italy and Spain and Portugal, and that's only to name a few. This will continue, and what we could see in the next year to 2 years is no more euro, because, again, all of those countries trade on the euro. So we will see massive inflation in Europe because of currencies falling. We'll see massive inflation in the United States and in North America because of the U.S. dollar plummeting and extremely high oil prices. So if you're sitting at this particular point in the wrong markets, meaning paper assets, I would much rather see you sitting in cash than lose your money in the stock markets. Every market has its time. Back in the 90s, the stock market was definitely the place to have your money. The U.S. economy was strong. U.S. dollar was strong. Everything was going extremely well, and the stock market was the place to have your money. However, at the end of 1999, when the Dow Jones plummeted and the NASDAQ fell from 5,000 down to 1,000, that should have been a rude awakening for most people that by us putting our retirement funds into the stock market and mutual fund market, the chance you might as well go to a casino because it's so risky that's not the place to have your money. I would recommend at this particular point a much more simplistic view as to what you need to do to get through these extremely difficult times. Number one is to own physical gold and silver. Not heavily leveraged because, again, you want to stay in the market. If gold's going to go to 2,000 to 5,000 to 10, whatever it's going to end up at, you want to own gold. We've been buying gold for 10 years now. We've been buying gold at $250 gold and $4 silver. We just recently came off of $1,900 gold, and we came off of $50 silver. So, again, we've seen massive increases in the price of gold and silver over the last decade. And this should continue, and we should start to kick into another gear where the price of gold and silver should move much, much higher with inflation coming. The other market that I would recommend is oil. Whether you put it in your RSP or you put it in your personal account, I would recommend an exchange-traded fund called an ETF, and it's USO for U.S. oil. Again, it trades very closely with the price of oil, and because we do believe that oil is going to move substantially higher over the next few years, you definitely want to have some of your investments sitting in oil. And rather than trade the futures market where you'll lose your money, you could buy an ETF, an exchange-traded fund like USO, and I think that will do the job for you. As far as your retirement savings plan go, you can also put physical gold and silver in your retirement savings plan. And you need something as a hedge against inflation, and gold and silver and oil are those hedges, and that's what I would strongly recommend. I would also recommend keeping cash. Even though you're not going to make any money on it, you're not going to lose it either. And again, by having your money sitting in paper assets like stocks and mutual funds, you don't invest in those type of investments when countries are going bankrupt. And most mutual funds are based on U.S. companies, and the U.S. is in dire straits. Again, I know it doesn't look like it if you watch CNBC or whatever, but again, those are just cheerleaders for the paper asset markets. Most people can't even afford to be in the stock market at this point because they lost their money back in 1999. And then they got wiped out again in 2008. So again, we are in a very strong market condition. I do recommend owning physical gold, silver, diamonds, and oil. And the fact is that if you own those type of assets, you're going to get through these next few years. You're going to be able to compensate for the high inflation that's coming. And when Bernanke came out this week and said that they're not going to do the stimulus at this particular point and they may raise interest rates before 2014, that contradicted what he said just a month before when they were going to keep interest rates at zero till at least 2014. So it tells me that if he's now starting to lay the groundwork for raising interest rates, it tells me that they're as concerned about inflation as we are. Now, let me just also say that when the U.S. dollar does go up in value, gold market tends to drop. However, in 1979 and 80, when gold went all the way to $850 and silver went to $52, the dollar was rising. The U.S. dollar was increasing at that point because the Federal Reserve raised interest rates all the way up to 22%. So even if the Federal Reserve does start to raise interest rates in the United States, it's for one reason and one reason only: inflation. And if we know that they're doing it because of inflation, we could literally see the gold and silver markets skyrocket in value as they're raising interest rates. And I truly believe that our exit strategy is going to be, for getting out of our hard assets, is going to be interest rates are going to get back up to 15, 18, 20%. The situation in the world markets is dire. And again, I know that sounds like a ridiculous statement to say that interest rates could go back up to 20%, but I truly believe that they will. And the game plan would be to sell out of our assets at that particular point, sell out of our gold and silver, hopefully at the highs, and then to be able to put your money back in the bank and collect 18 or 20%. There's a very, very good chance that will happen over the next 5 years. So if you're not in gold and silver at this point, I highly recommend that you put some of your money into the physical gold and silver market to compensate for the extremely high inflation that's not only here now, but coming that much further. And if you look at where the smart money is going, look where China is putting their money, and India where they're putting their money, and Russia where they're putting their money. It's all into gold. They're not buying stocks. They're not buying paper assets. They're not buying derivatives. If you look at a guy like George Soros, one of the most prolific investors of all time, he's the guy that brought down the Bank of England and made $1 billion in a day when $1 billion was a lot of money. He's saying that the world financial markets are close to collapsing. So if there's the risk that we could see a total collapse of the financial markets, if that's possible, and we saw it in 2008, we came within seconds of seeing that happen. If it's possible that it could happen again, why would we not want to have insurance on our financial situations? Why do we not want to protect what we have? The idea is to own physical gold, silver, oil, and diamonds put away. Those are the assets that will make the most amount of money and protect you against this onslaught of inflation, which is right around the corner.
The telephone number to invest in precious metals. There's only one company Harold recommends, that is Worldwide Precious Metals, a Canadian company out of Vancouver. They've been in business over 10 years. Their telephone number, 1-866-623-2002. The website, wwpmc.com. We have a free weekly newsletter we send out via email. It's like a smorgasbord. You can go through it very, very quickly and educate yourself in 10, 15 minutes every week. Or you can spend hours. We've done it in a way where we want to inform you. You can go through it on your smartphone, your computer, whatever you want. You're going to be updated. It's the companion to our radio show. Speak with Worldwide. Get your name on the list. We send it out free via email every week. 1-866-623-2002, the website, wwpmc.com. And speak with Worldwide about investing in precious metals. They can help you manage your precious metals investment account. You can trade the market if you want, or just buy and hold your metal. They're there to help you maximize profit, minimize risk. They're the experts in this very specialized market. Speak to them about all the different ways there are to be involved in precious metals. And remember, this is a liquid asset. You can buy and sell with a phone call. Every portfolio should have an allocation of precious metals, whether it be 5 or 10% or higher, depending on your risk tolerance, at all times, good or bad. So when you're allocating your capital, the money that you have, include precious metals for profit and protection against the falling U.S. dollar, inflation, deflation, the current, what I believe is ongoing recession, financial crisis, and geopolitical turmoil. And you can use inflation to your advantage. Turn inflation into real wealth by investing in hard assets. Stop the destruction of your paper wealth by investing in hard assets like gold, silver, diamonds. Turn paper assets into hard assets for real wealth. Since 2001, hard assets have resumed their role as a store of wealth, protecting you against the decaying purchasing power of paper money as central banks around the world continue to print like crazy. And we welcome everyone in Calgary to our radio show. We were on in Calgary in the past. We're back in Calgary, also Edmonton and Toronto. If you ever miss a radio show, catch us online, HESradio.com, but speak with Worldwide Precious Metals about investing in gold, silver, platinum, palladium, 1-866-623-2002. Their website is wwpmc.com. Back in August of 2005, Harold Siegel brought to our attention something that no one else had ever really done before, and that is rare colored diamonds as an investment. We'll talk about it as the World Financial Report on radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial expert, Harold Siegel. We're taping the show at 9/11. That is Mountain Time, 11:11 Eastern Time, March 2nd, 2012. Radio show runs on AM 640 in Toronto, 630 CHED in Edmonton, now QR 77 in Calgary. If you ever miss a radio show, catch us online. Harold's website is HESradio.com. The shows are also on rarecoloreddiamonds.com. Often imitated our radio show over the last 10 years, but never duplicated. We know that for sure. And when it comes to investing in precious metals, there's only one company Harold recommends, that is Worldwide Precious Metals. They have been in the business now for over 10 years. They're the experts in this very specialized field. They are the people Harold recommends you use. 1-866-623-2002 to invest in precious metals. Their website, www.pmc.com. You can get our free weekly newsletter we send out via email from them. Harold brought to our attention, and I actually have this still printed out from August of 2005. Naturally fancy colored diamonds, the best kept secret. Harold brought this to our attention back then. And this was a special report. You can still find it on his website. And back in 2005, no one was talking about naturally fancy colored diamonds or diamonds in general as an investment. And as the financial crisis developed, and we've seen the world go through the Great Recession, a lot of people believe it's a depression depending on where you live, we have seen the prices of diamonds go up dramatically. And Harold was the first one to bring it to our attention, and it has been a massive, massive winner. 5 compelling reasons to invest in diamonds. Privacy, portability, it's great for estate planning, price stability, and good long-term growth. Harold's website is rarecoloreddiamonds.com, rarecoloreddiamonds.com. The telephone number to speak with him personally and privately about diamonds is 1-800-432-1022, 1-800-432-1022. And Harold developed, and this is something that developed over a period of time, a couple of years, and has been launched. There's been approximately 4 auctions now, hsfineauctions.com. We just had an auction on Monday. Harold will talk about it. But that is another thing that Harold has done, a first. One thing I should mention as well is that on rarecoloreddiamonds.com, the diamonds that are featured there have their own video. Not just pictures, but their own video. Our featured diamond of the week, and you can speak with Harold about this diamond, is a 1.51 carat cushion-cut fancy, vivid, yellow, internally flawless diamond. So it's a 1.51 carat cushion-cut fancy, vivid, yellow, internally flawless diamond. And I want you to think about this. Richard Russell brought this up a few years ago. It's a good question. If I told you I was going to give you a large steel box for your children, and that box was not to be opened for 50 years, would you rather I put $3 million in cash in that box or $3 million in gold, silver, and diamonds? Which one would you choose? And Harold, with the way the world is going, I think most people would be choosing the hard assets. They have stood the test of time. Fiat currencies are not standing the test of time, as they never have. People have continued to be debased over the history of currencies, but hard assets have stood the test of time. And that's why we're advocating gold, silver, platinum, palladium, diamonds in this environment. And I know that you've done everything you possibly can when it comes to helping your clients by having an auction site and having the best site on the internet for rare colored diamonds.
Well, thank you, Randy. I appreciate that very much. I've been in the investment business for 35 years. I've been through the inflationary times of the 70s and 80s. I've traded the markets. I've been through the run-up in diamonds during 79 and 80. Did you know that when gold went to $850 and silver went to $52 because of inflation, the colored diamonds went up 500% those 2 years? The thing with colored diamonds or any type of diamond investment is the fact that people realize it's a great investment. People understand that it's portable private wealth. You could walk around with $1 million worth of diamonds in your pocket and nobody would even know the difference. You can cross borders with them where you cannot cross a border with more than $10,000 in cash in your pocket. But the biggest problem with diamonds was how do we resell them? Same with coins and the same with high-end collectibles. And we realized this. And 2 years ago, we started building hsfineauctions.com. hsfineauctions.com. It's the only live, real-time auction website for selling high-end collectibles. What we actually did was created a secondary market to resell high-end coins, rubies, emeralds, and sapphires, and beautiful diamonds. Well, we kicked it off this year, or last year. We've had 4 auctions. They've been tremendously successful. It's not like an eBay auction where you or any other auction where you go on and there's no human selling. It's just you put in your bid and that's it. With my website, it's me selling every single product. So when you go to hsfineauctions.com, you go to the Getting Started section and you fill out your pertinent information, and we give you a password to attend the auctions. We have probably 2 auctions a month. Go to the catalog and view what the products are for sale. Now, last Monday we had an auction and it was tremendously successful. Everything sold, including a Louis Comfort Tiffany coin. This coin was so beautiful. You can see it on the website, hsfineauctions.com. We sold the Pope 21st anniversary gold coin set. We sold the first anniversary of the euro. We sold a 10-ounce proof silver coin. We sold 2 silver kilo coins, one being the Libertad, which is one of the most sought-after silver coins. It weighs 32.15 ounces, and it sold for over $4,000. The Year of the Monkey was a silver kilo coin, again, weighing over 32 ounces, and again, that sold at a phenomenal price. Then we sold 7 pink Argyle diamonds, and we sold 1 magnificent 1.16 carat cushion-cut pure fancy green diamond ring. This is the first time that this has ever happened. Nobody has ever built an auction site like this. It cost a ton of money and a tremendous amount of work. My friends from Vancouver at Relentless Technologies built this on my other websites for me, and it is by far the greatest thing that I've ever done in the business, because again, we're literally creating a secondary market for our clients to resell their high-end collectibles. So go to that site and take a look at it, HS Fine Auctions. I think you'll be blown away with it. And a lot of people attended the last auction. Over 300 people attended the auction. You can literally watch the auction by getting involved, and you don't even have to bid if you don't want to. But I can pretty well assure you, once you see the excitement of what's happening and what's being sold and the enthusiasm by everybody bidding on these amazing items, you'll get into it also. It's really a phenomenal thing. Now, I guarantee everything that is sold on my website, on my auction site, 100%. I only sell items that I have helped my clients attain. I will not sell diamonds from other dealers because, again, I cannot verify how strong the color is and all that type of thing. This is built for our clients to resell their high-end collectibles, so I'm extremely excited about it. HS Fine Auctions is the only real-time live auction website in the world today, and I sell every single product. And again, people that have listed their items on our site have been extremely happy with the returns that they've seen. Now, getting to the rare color diamond market. We specialize in rare color diamonds. Yellow flawless diamonds have a track record, and those are diamonds that we recommend very strongly that you consider as an investment. Yellow flawless diamonds, either fancy yellow, fancy intense, or fancy vivid, those are the 3 best colors, and they have to be internally flawless. Anything under that does not move up anywhere near as much as a flawless diamond will. These diamonds increase in price by 25% a year, which in itself is a phenomenal investment. They double in price every 4 years. Again, tell me any investment out there that has that type of track record and never, ever has fallen in price in the 35 years that I've been in business. Now, maybe 100 or 110 of these diamonds become available a year, and most of those diamonds that are cut go to me, and those go to my Canadian clients. So these diamonds can double in price every 4 years. Most of our clients that invest in yellow flawless diamonds buy them for retirement, because a diamond you could buy today for $20,000 in 10 years from now will be worth about $100,000, and we are the only company that can resell that diamond for you. Nobody else can do that. The other thing is that with yellow flawless diamonds is that during 1979 and 80, these diamonds went up 500% in 2 years when inflation kicked off. Well, we know we have high inflation, and we know inflation's getting higher, so you definitely want to own a yellow flawless diamond for protection and for increase in value, because as inflation moves up, so does the value of these diamonds. And we anticipate in the next 5 years, because the Federal Reserve did come out and say that they're going to keep interest rates at 0 to 2014. Now, they may change that slightly, but again, by keeping interest rates that low for another couple of years, that's going to bring on massive inflation, because the U.S. dollar and the other currencies will not buy as much. So basically, we will see that the U.S. dollar will continue to fall, but the height of inflation will continue to skyrocket, and that can push these diamonds up substantially. We anticipate in the next 5 years that a $20,000 yellow flawless diamond will be a $100,000 diamond, and it will be our privilege and pleasure to resell that for you on our auction website. In fact, we only charge our clients 10% of the profit only. So if we don't do a great job for you, we don't do well ourselves. The other diamonds that I recommend very highly are Argyle pink diamonds. Argyle pink diamonds are the most beautiful diamonds that you'll ever lay your eyes on. And the thing about the Argyle pink diamonds is that 95% of them come from one mine and one mine only, and that's the Argyle mine in Western Australia. This mine was discovered in 1985. It's been producing 30 million carats of diamonds since then, and the production is starting to fall off. Now, out of those 30 million carats, only 200 carats are these beautiful pinks. It's a tiny little market. If you held your hand out and they poured the full year's production of pink diamonds into the palm of your hand, it would barely cover the palm of your hand. That's how tiny the pink diamond market is. But 95% of the world's pinks come from this mine, the Argyle mine, and that mine will close before 2018, which is only 6 years from now. Give it 2 years for these diamonds to run out, and we anticipate that the price of pink diamonds will increase tenfold from what the prices are right now, meaning a $50,000 pink could be a $500,000 return within the next 10 years. And we very, very strongly recommend, while you can still get these diamonds, to get an Argyle pink diamond into your portfolio. They're magnificent. They're the most beautiful diamonds. And again, pink diamonds are just the most sought-after diamonds. We've seen massive increases in certain diamonds over the years. For example, red diamonds. Red diamonds are the rarest of all diamonds. There's been less than 50 pure red diamonds ever graded by GIA. And in 1950, you could have bought one for under $20,000. Today, they're $2.5 million a carat if you could even get one. The reason that we said the pink diamonds will increase 10 times what today's value is that we saw a similar situation with blue diamonds in 2005. The major mine in South Africa that produced these beautiful blue diamonds closed in 2005. You could have bought a vivid blue flawless diamond back in 2005 for about $200,000. Go forward 3 years later to 2008, as the financial worlds are falling apart, there was an auction in New York, and a vivid blue pink diamond sold for $1.4 million a carat, went up 700% in 3 years because the mine closed down. Now we've got a second opportunity to revisit a very similar market situation. As I mentioned to you before, I've been through these situations before. I know how to trade them. I've traded gold and silver back in 79 and 80, and I traded diamonds back in 79 and 80, and how unusual is it that we now have a second opportunity to play the same markets again? The thing about the rare color diamond market, yellows and pinks, is that they never go down in value. They increase by at least 25% a year. During times of high inflation, they can go up 500%, and they never, ever, ever fall in value because there's so few of them. The problem with them in the past has been, how do we resell them? And we have taken care of that. We own hsfineauctions.com, the only online real-time auction site that sells rare colored diamonds and high-end gold pieces, and we even sell rubies, emeralds, and sapphires. So again, visit our websites, rarecoloreddiamonds.com, rarecoloreddiamonds.com. Now again, I don't have any problems with competition. In fact, competition is what makes the world go round. On any street corner, you're going to see a Wendy's, a McDonald's, and a Burger King, and they all do business. So the fact is that nobody ever talked about the rare colored diamond market before until we did 7 years ago. And the reason that I brought it up 7 years ago, because we were convinced that we were going to go into a heavy inflationary cycle, and rare colored diamonds do phenomenal during times of high inflation. Since that time, many companies have copied what we do, and again have tried to get into the same market. Again, competition is healthy. One thing you need to ask yourself is that when you go to sell your diamond, who's going to be able to do that for you? The person that created the secondary market to resell their clients' high-end collectibles, or somebody that has no opportunity to resell your diamonds for you? So again, all we want is for our listeners to the radio show to do well. We give you this information so you can make an intelligent business decision. I know how many times I've crossed borders with my wife wearing an 8 to 10 carat diamond. They've never ever stopped her, nor anybody that I know, but try to cross a border with more than $10,000 in cash, gold, or stocks in your pocket and see what happens. The other thing is that the Europeans call diamonds real estate in your pocket. You could literally walk around, again, with $10 million in your pocket and nobody would even know it in the form of a diamond. But most of our clients are not billionaires, and most of our clients do not invest millions of dollars in the diamond market. They put $20,000, $50,000, $100,000 in, whatever is comfortable. But you should do at this particular point is liquidate some of your paper assets like your stocks and mutual funds that are very, very dangerous at this point, and diversify your portfolio. Have some physical gold, have some physical silver, own some rare colored diamonds. They're the best investment and they're the safest investment you can make. And if, God forbid, guys like George Soros are right, and we have a situation in the world markets like we have the potential where these markets could plummet and the paper asset markets like they did in 2008 can take all your money away. If you have some gold and silver and diamonds and oil, that's not going to happen to you. 90% of the money is made by 10% of the people, and all we want is for our Canadian clients, the listeners to our radio show, to be in the right markets at the right time. So again, go to our website, rarecoloreddiamonds.com. Go to the loose diamond section and go to the yellow diamonds first. There's many, many different colors of yellow. We only deal in the top three colors: fancy yellow, fancy intense, fancy vivid. Fancy yellow diamonds sell in the $16,000 to $20,000 range depending on the price, on the size of it. And again, those diamonds increase every single year by 25%. In fact, in September, we're going to see a 25% increase in the price of our yellow flawless diamonds. Argyles, they just take on a life of their own. They're so rare, and there's so few of them available, and the closer we get to the mine closing down, the higher and higher and higher those prices go. So again, do yourself a smart move. Again, these are not the 90s. This is a totally different time. In 2008, we almost saw the financial markets as we know them totally destroyed, and there's very, very brilliant people like George Soros, John Embry, guys like that are saying we have the potential of seeing the same type of market condition happening more than likely in 2013 after the elections are done in the United States. So again, these are very dangerous times. These are not the 90s when you could have thrown a dart against the Wall Street Journal and picked a stock that was going to double or triple. Most people are losing their money in the stock markets and in the paper asset markets. There will be a time to invest in those markets again. It's just not right now. Now, gold has gone from $250 to $1,900. Silver's gone from $4 to $50, and diamonds have done nothing but go up in value. Go to our website, look at our yellow flawless diamonds, look at our pink Argyle diamonds, and then look at the featured diamond this week, which happens to be 1.5 carats of the most beautiful vivid yellow flawless diamond that you've ever laid your eyes on. Vivid is by far the strongest and the most expensive color that GIA will grade, and again, to get one that's internally flawless is just an amazing coup. And I'll leave you with this, and I'll send this to you if you want. In 2011, Christie's auction house in New York had an auction, and there was a 2.5 carat fancy vivid yellow VVS1. It wasn't even internally flawless diamond ring. It was magnificent. It had a Bulgari setting. It was a beautiful 2.5 carat diamond. It was vivid, but it wasn't flawless. And the experts at Christie's said it would sell for between $110,000 and $150,000. Well, it shocked the world when it sold for $960,000. So when you go on my website, rarecoloreddiamonds.com, and you go to the loose diamond section and look at these beautiful yellows, just happen to click on the featured diamond and see that 1.5 carat vivid yellow flawless. But then look under the vivid yellows, and you're going to see a 2.4 carat, and I just put this up, a 2.4 carat vivid yellow flawless diamond. It was the same size as the diamond that sold for $960,000 last year, but the difference between my diamond and theirs is mine is internally flawless and theirs was not. Their diamond sold for $960,000 in a ring setting, and my 2.40 radiant cut, fancy vivid yellow internally flawless diamond is on sale for $110,000. that's a diamond that you want to own, because again, in 5 years from now, that'll be a 7-figure diamond. So again, go to our website, rarecoloreddiamonds.com. Enjoy yourself. These are not just pictures. Click on the videos, and you will see the videos of these magnificent diamonds. We spent a tremendous amount of money to be able to video our diamonds so you could see every aspect of the diamond instead of just a picture. Again, we're heading into the most dangerous financial times we have ever seen. You need to diversify your portfolio, and rare colored diamonds should be a major part of that. In fact, many of my clients own substantial diamonds put away for their family in the future. I have 2 young grandchildren with another coming, and all of them have yellow diamonds, flawless diamonds put away for their future because they're safe, they never go down in value, and within the next 20 years when the kids are ready to cash them in and start to get on with their life, they're going to have an asset that's worth a tremendous amount of money. I certainly did that with my son growing up, and he bought his first home based on a diamond that my wife and I both gave him. So again, enjoy yourself on our website, rarecoloreddiamonds.com. Look at the featured diamond this week. You'll see a beautiful, vivid yellow flawless. You'll see that 2.40 that again is a steal, and you'll be able to make a ton of money on that. And then go to hsfineauctions.com and see what we sold last Monday. I think you're going to enjoy our websites and enjoy doing business with us. And we ship most of our diamonds to Canada because, again, we take care of our Canadian clients. I'm Canadian, Randy's Canadian, and so are the listeners to our radio show.
RareColoredDiamonds.com, the telephone number where you can speak with Harold personally and privately, 1-800-432-1022. Take a look at hsfineauctions.com. You can see some of the items that were auctioned off on Monday. To invest in precious metals, wwpmc.com is the website. Worldwide Precious Metals, the company Harold recommends you use. Their telephone number, 1-866-623-2002. You can get our free weekly newsletter from Harold or Worldwide. We send it out via email every week, and we would encourage you to get your name on the list. We have our charts of the week this week, quotes and quick hits, information on diamonds, gold, silver, platinum. The sovereign debt crisis continues in Greece. Greece, they got a bailout, and everyone's already talking about, well, it won't last, and they'll end up defaulting. And also, the U.S. debt and deficit problem continues. It looks like right around the election time. Yes, they're going to have to raise the debt ceiling yet again. Also, there's a pension crisis in the United States. Information on that. Also, the Federal Reserve, Ben Bernanke spoke. Inflation, oil, gas, nat gas, banking, stock market, real estate, Warren Buffett, water, and geopolitical, a huge section in our newsletter. It's a must-read every week. Speak with Harold or Worldwide about getting your name on the list. And because we were reintroducing ourselves to Calgary, we didn't get to a lot of the stories that we normally do talk about on our show. That's why it's important that you take a look at the stories we have this week and some of the projections for gold and silver and diamonds. One of the stories I wanted to touch on, Eric Sprott and David Baker. They wrote an article called Unintended Consequences. We have a link to it in our newsletter. And they say, there is unfortunately no economic textbook to guide us through these strange times, but common sense suggests we should be extremely wary of continued maneuvering by central banks. The more central banks print to save the system, the more the system will rely on their printing to stay solvent. And you cannot solve a debt problem with more debt, and you cannot print money without serious repercussions. The central banks are fueling a growing distrust among the creditor nations that is forcing them to take preemptive actions with their currency reserves. Individual investors should take note and follow suit because it will be a lot easier to enjoy the year of the central bank if you own things that can actually benefit from all their printing as opposed to things that can only be destroyed by it. And Harold, we have about a minute left here in our show, and I agree with Eric Sprott from Sprott Asset Management and David Baker, who's with them as well. We're in a time of unintended consequences, and you have to keep your head about you. You have to be aware where your money is situated, and we obviously advocate that people should have a percentage, a portion in hard assets.
You bet, Randy. Again, it's never been more important than now. We're heading into probably one of the most dangerous times we've ever seen. And again, all we want to make certain is that listeners to our radio show are protected, have insurance, and again, that's gold, silver, and diamonds. I want to thank everybody for listening to the radio show, and I want to wish everybody a very profitable day.
Thank you very much, Harold. The radio show runs 6:30 CHAD in Edmonton, AM 640 in Toronto, and now back on QR77 in Calgary. Harold's been doing the show for about 10 and a half years. I've been doing the show for 10 years. The website's www.pmc.com to invest in precious metals, 1-866-623-2002. The telephone number for diamonds, rarecoloreddiamonds.com. Telephone number 1-800-432-1022. And take a look at Harold's website, hsfineauctions.com. We will announce the next auction. It should be coming up very, very soon. And you can just sit in and watch. All you have to do is sign in, and you do not have to bid, just to build your confidence. We'll talk about that more in the future. And get our newsletter. It's important that you get the companion to our radio show. It will keep you informed every week along with the radio shows. And they are archived on Harold's website, hesradio.com. That's it. Another edition of the World Financial Report on radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.